Good morning, everybody. It's Chris from Serene Education with the 4 majors and update for the 14th of January 2014. Morning, guys. Okay, let's starting with the euro against US dollar using the FX8 Ultimate template. Let's have a look and see what happened yesterday. Not much, in fact. You'll notice I have some vertical lines on the chart here, and I've plotted the RSI, the Relative Strength Index. I just wanted to bring to you something interesting in terms of what the RSI represents. We all know that RSI actually plots relative strength of a particular object. In this case, I'm using it against the euro against US dollar. It's plotting the sentiment for euro against US dollar. And as long as the principles are, if it's above 50, then we're looking at positiveness. If it's below 50, then we're looking at negativity. However, I use it I also use it for a different setup in terms of convergence and divergence. Noticeably here, I'm quite interested in the fact that euro has failed to break above the monthly fib here at 61.8 and has failed to do so on a number of occasions. As you can quite clearly see, I mentioned yesterday we had one in October, we had a couple through December and the start of January. So RSI plots sentiment. Okay, so if price is moving higher, then you would expect relative strength to be moving with price because it's plotting price. Yes, it's lagging, so therefore it should be actually moving with price. When you start seeing price moving one direction and the RSI doing something totally different, that's when you start to wonder where that sentiment lies, because remember, it's plotting sentiment. So if price is moving higher, then it's positive sentiment, and if price is moving lower, then the RSI is going to be showing negative sentiment, i.e. below 50 and above 50. So here, okay, you can quite clearly see we had an attempt on the same place back here at 1382. We had the same attempt here. Okay, notice, however, how the RSI, each time we've attempted the same level, the RSI has dropped. That's interesting, because each time price has made a valid attempt at the prior high, it's failed to carry the same amount of momentum as it did on the initial attempt. That's bound to happen. More people are more likely to give up, and more profits likely to take in as price fails on each occasion to break this level. And that's the sentiment right now that's telling us that the longer price takes to break a major support and resistance level, the more likely people are going to walk away from it. In this case, you can see the sentiment starting to drop, and we've noticed the RSI has, in the past week or so, we've seen the euro falling quite drastically, and that fall has taken us below the 50% level here. And now we've had a pullback, and you'll notice that pullback now is at the underside of price support. Here we go, in the shape of the 1366 and change. Now it's pulled back. Now if this is to be a genuine negative setup, then we would need to see the RSI remaining below the 50, and we would need to see price failing in and around this area here at 1366. However, remember, okay, that the RSI is just plotting market sentiment. Remember that price over here is still, the candlesticks are still positive, and the institution moving average is still below price. You'll notice that there's more positiveness on the chart. Yes, there's one or two areas that the negativity is coming into, and that will potentially get stronger the longer we fail to break the current high. Hence the reason why it's important. We have a lot of indecision candles. We've had seen a bit of positiveness primarily after the outcome of non-farm payroll. We saw this nice little consolidation here, and it's consolidated above the 50% on the monthly fib level. So if this is to be if we are to see a further attempt of the prior high, then we would need to see a bullish engulfing candle, and the RSI would need to jump back up again. Okay, and then we could see a valid reattempt. But you'll notice each single time she attempts a prior high, we are seeing less bulls or bullishness coming to the party. So it's not telling us we should. It's not saying heads up, be aware. We could see a drastic drop. But the longer we fail to break above the support and resistance level high, the more likelihood of a change in market sentiment, i.e. one of positiveness, because we've attempted so many times, to one of negativity will start to creep in. So I use the RSI just to give me a heads up when I'm looking for genuine sentiment in the market, and here's a good example of that. Okay, sterling, here we go yet again. You can see sterling is still failing to really break away from this very, very strong pull, gravitational pull at the 38 to the monthly 38.2 fib level. you'll notice that price action is kind of stalled. It's stalled over here through November. Here again, the RSI, if you had a plot an RSI on here, it would give us a, let's have a look at that and use an example. You'll notice each time she attempted the current high, you'll notice the RSI is above the 50, which is positive because it's telling us it is positive sentiment, and we have seen price moving higher, which is great, fantastic. However, each valid attempt here, for example, of the fib level, here again of the fib level, here again, notice each bearish move, you'll notice that price is moving higher here, but you'll notice that the RSI was dropping. Okay, so it's telling us we're seeing a change in market sentiment from one of very positive to one of indecisive, and it's primarily because we are trading at a major support and resistance level in the shape of the 38.2 level. Here, clearly you'll notice that the candlesticks have not changed to red, and but we do have a red arrow, and we have a bearish engulfing candle yesterday, which is not a clear sign, and we're back below the 38.2 fib level. You'll notice that the RSI is still above the 50%, so we need that to drop below the 50% line to tell us it'll be genuine. You'll notice the RSI indicator is already below that level, but however the RMO, which is trend relating, is still very much above the 0 level. Okay, so we're still very much in a positive trend upside. However, we do need to see price now stalling at the underside of that, using 38.2 level at the underside as a major resistance level. Then we have the breakout candle that happened yesterday, the pullback, and then we'd like to see that continuation, and the continuation would be lower. This morning we have all-important CPI year-on-year figures for sterling for the UK market that don't see a change from the previous figure of 2.1%, and let's hope it comes out that. It's very, very important. We haven't raised our interest rates, so trying to keep this under check, the CPI and the RPI and PPI under check, is very, very important. The moment that starts to get away from us, then we have to start wondering if we shouldn't be raising our interest rates. So it's very, very important one to watch. There's nothing else forecast for the UK market besides the CPI. So very, very important news this morning. If we drop down to the 4-hour time frame, move it over, you notice that we are still, you can see the institution moving average on the 4-hour clearly being a support level, but you'll notice there's a lot of spinning tops and dojis along this area here, and you can see the RSI is clearly below. The RMO is still above. Okay, so very, very important. We might see that news either dragging price lower to give us that confirmation continuation, the break lower, the pullback, and the continuation lower, or we get some good figures out for sterling on the CPI, and that pushes back up again, and we'll go back into the consolidated range. US dollar Swiss franc, here again, also a fall from grace. We saw a lot of we saw a nice support level being forged here on the weekly fib level here at the 38.2 level through most of December, and because of that, price was likely to bounce, and it bounced quite aggressively through the latter part of December going into January. However, recently we've seen that being capped by a bearish engulfing candle, and that has now seen price falling low over the past couple of days, and non-farm payroll didn't help at all, clearly. And you saw some further selling yesterday, not as aggressive as the past couple of days, but still giving us a nice swing. And that's this swing over here is lower than that swing, which is lower than that, which is lower than that. And you can see the overall sentiment is low. Okay, the institution moving average governing price. Okay, so we know that the US dollar is still negative against the Swiss franc. We are seeing a very, very indecisive indicator box over here. Long-term sentiment still favors the downside. We are seeing the R squared complementing the buying that we're seeing intraday, and that's primarily because it's consolidative. You drop down to a 4-hour time frame, you could see that price has pretty much not gone anywhere very, very quickly. It's actually, we saw some selling yesterday, however that's all been taken back through the latter part of trading over the Asian session, in fact. So we're still above the institution. We would need to get below the institution moving average here at 89.70 and change to see any further aggressive selling back towards those support level areas that we came through or saw at the start of December. And we're looking in excess of 130 odd pips from the institution down to that level. So there's more than enough in the tank to see a genuine return on time invested on this particular pair. However, we would need to see the institution moving average being breached. You'll notice that price is trading right now at a prior support and resistance level. Support level, prior resistance, support. So clearly, a nice bearish engulfing candle, 4-hour candle closed lower than the institution would then definitely see further sentiment favoring the bears, and we could start looking towards that ultimate level down here at the 38.2 level as a genuine target. US dollar Japanese yen, here on the daily, we failed to get above that 61.8 monthly fib level, and I mentioned the longer we fail to get above that, the more likely is the bears are going to take over and we should see a return to prior support and resistance levels, and that's clearly what we've done over the past couple of days. Yesterday, a lot of negative selling for the US dollar against the yen, and what it did was it broke through the daily. I've taken the start of the trend higher from the September low to the current high that we saw in early January, and you'll notice that the 23.6 fib level has been breached. Now if price pulls back now and fails to find support here and bounces higher, then what we could see is a breakout candle where we saw a break of the 23.6. Now we've seen the pullback, and now we need to see a continuation candle. So a break on, you drop down to the 4-hour time frame. There we go. We've seen the institution moving average being breached for the first time in as many months. The last time we were trading below the institution was way back here in October, okay, through September, October of last year. So now we're back below that level again, which is a negative signal. You can see that we have red arrow, red candles. Now we're going to look at the 23.6 acting as a resistance level, pushing price lower. Then we could look to target the 38.2 as a valid target area, and that's a comfortable 124 pips away. So just be patient. You'll notice the RMO on the 4-hour time frame very much above the zero line. Yes, we dropped here just below aggressively, but we're still above the institution moving average, and we hadn't broken a price swings. And you'll notice that the candlesticks, when we had that selling opportunity, were indecisive. Very small wicks, hammers, in fact, not a clear selling candle opportunity. Here, however, very, very different. We have had a bearish engulfing candle break below the institution, which is negative, bearish engulfing candle, which is negative, sell signal, which is negative, RMO dropping below, negative, OSMO below, negative. So we have a genuine opportunity here for further shorting opportunities if and when we see a clear failure here at the 23.6 level. Okay, guys, that's it. Short and sweet today on the 4 majors. We do have some news out today. I did mention that UK, we have the CPI, the inflation report out year-on-year figure this morning. That's followed by the industrial production month figure for the Eurozone from a negative 1.1%. They're expecting a positive 1.6%. So if it comes out anywhere near that or higher, it'll be fantastic news for Euro. And so we've got to keep a close eye on that. Then this afternoon we go straight into the US data. We have core retail sales month-on-month figures. That's going to be quite interesting because we're going to see how that actually comes out after the festive season. We have the retail sales month-on-month figure to complement that. They're expecting a slight contraction from 0.7% down to 0.2. That's a 0.5% difference, quite drastic. Then we also have the import price month-on-month figures. They're expecting a positive one for that, from a negative 0.6 to a 0.3. And then we have a number of the FOMC members speaking. We have Plosser and then we have Fisher later this evening. So things to watch. And also this evening, Nikki and I are doing a webinar, so check your emails to see if you are interested. If you are interested in joining us on our webinar tonight from 7:30 GMT onwards, please get hold of us at the email address posted at the end of this video. I'm going to leave you with that. Hope you have a fantastic trade day today, guys, and I'll catch you first thing tomorrow morning. Until then, you guys trade serenely.